tabled last evening, and like you've ordered that it be circulated, that is quite in order, although Honorable Nyekala, I think he had actually stepped out, and also to inform him that we are actually discussing the bill and not the report, but we are well guided as far as the circulation is concerned, Honorable Speaker. So, Honorable Speaker, I beg to move that the tax procedures amendment bill number 20, bill of 2024, the National Assembly bills number 46 of 2024, be read for the second time, Honorable Speaker. And the bill, Honorable Speaker, was published on 1st November 2024 and was actually read for the first time on 13th of November 2024, and thereafter it was committed to the Departmental Committee on Finance and National Planning for consideration and tabling in the House. Honorable Speaker, I wish to give the overview or the general overview of what really this bill, the proposed amendments contains, Honorable Speaker. And I will start, Honorable Speaker, with the clarity on the form, the nature, and the contents of the electronic tax invoice. The electronic tax invoice, Honorable Speaker. Honorable Speaker, looking at the clause 2 of the bill, it seeks to amend the section 23A of the Principal Act by inserting a new subsection 2A to clarify the information required on electronic tax invoice. This also mandates that such invoices should contain the following information, Honorable Speaker: the designation tax invoice, the name, the address, and the PIN of the supplier, and if available, Honorable Speaker, the same details for the purchaser. That is what this particular clause seeks to clarify. Number 2, Honorable Speaker, it also requires the inclusion of the tax invoice serial number, issuance date and time, supply date and time, if different, description of the supply, including, of course, the quantity or types of services, and the details of any discount applied, consideration for the supply, tax rate charged, total amount, and any other information. Mr. Speaker, in order to address the challenges posed by small businesses, small businesses face and the small-scale farmers, this bill also seeks to insert a new subsection 3A. And I call upon honorable members, Honorable Speaker, to follow on this even before we get to the committee of the whole House, so that they can be able to, because we all come from areas that have got very many small-scale business owners. So it seeks to insert a new section 3A, where a small business or a small-scale farmer will be the one to issue a tax invoice for the purpose of ascertaining tax liability. This will apply to those whose turnover does not exceed 1 million. The word here, Honorable Speaker, is that it does not. It only applies to those that have whose turnover does not exceed 1 million. So this proposed amendment, Honorable Speaker, seeks to provide clarity, and they also simplify the compliance for business. Honorable Speaker, let's look at the extension of tax amnesty program, whose deadline is June 2025. Clause 3 of the bill proposes to delete Section 37E of the Tax Procedures Act to extend the tax amnesty program deadline from 30th June 2024 to 30th June 2025. Seeks to extend the tax amnesty program deadline, Honorable Speaker, from 30th June 2024 to 30th June 2025. This proposal will give taxpayers relief from the penalties and interests on unpaid taxes, which will also, of course, allow them to save money and reinvest in their businesses while increasing government revenue. Clause 4, Honorable Speaker, of the bill introduces also a new section, Section 35F, to the Tax Procedures Act, which offers relief in cases where recovering unpaid taxes becomes uncertain or challenging. If the Commissioner deems it impractical to collect a tax, or if there are significant obstacles, costs, or unfairness in pursuing it, they can choose not to pursue the unpaid tax with approval from the Cabinet Secretary. So the word here is, if the Commissioner deems it impractical to collect a tax, impractical, and if there are very significant obstacles along the way, costs, or unfairness in pursuing it, they can choose not to pursue the unpaid tax with approval from the Cabinet Secretary. In such instances, Mr. Speaker, the tax liability is considered resolved. Very, very important for business people and for honorable members to understand. So if necessary, the CS can guide the Commission on how to proceed or involve the court as provided for in subsection 1, 2, and 3. So consequently, Honorable Speaker, under subsection 4, the Commissioner will be required to publish in the Gazette specifying the names of the taxpayers, the relevant reasons for the tax abandonment, and the amount of taxes abandoned. That would be the requirement in the Gazette. So this will ensure that such information, Honorable Speaker, is in the public limelight for scrutiny so that people do not abuse it. That you know the Cabinet Secretary, you know, you will just maneuver your language and get to the Cabinet Secretary, find some way and fix yourself for such, you know, to be considered by the Cabinet Secretary. So gazettement, again, brings it to the limelight for the public to know. You can download the Gazette notice, which is a public document, and see the reason and the names for the tax abandonment issue. Mr. Speaker, the immediate question that arises is what then safeguards, or what safeguards are there to ensure that such a provision is not abused? And that is what I've said. In order to address these concerns, what this House has done is woven into these provisions as captured now under subsection 5. That is what the National Assembly will do, of course, so that people, again, as I've said, do not abuse this program on how you know the CS and who you know can connect you with the CS. Indeed, it is not enough for the notice to be published in the Gazette. The notice will be laid before the National Assembly, and just like statutory instruments in our Statutory Instruments Act, the National Assembly will have the opportunity to approve or annul the Gazette notice. So that is the gist of this particular proposal, that even having the names published and the Gazette notice, such again will be tabled in this House. And it will be just like any other statutory instruments, it will be tabled here under the Statutory Instruments Act, and this House will have the opportunity to either annul or approve. So if there is a question of abusing the powers by the Cabinet Secretary or powers that be, or the Commissioner himself, then this House will be able to correct that mess. So this is an important safeguard, and it retains the authority of this House on tax abandonment in ensuring that the provision is exercised with fair judgment and probity. And there is nothing that is outside the law, Honorable Speaker. This is in line with Article 95 of the Constitution on our oversight roles. We continue with our oversight responsibilities in terms of making sure that people do not abuse their powers and mess around with what is supposed to be done. Honorable Speaker, allow me to also point out that this provision will offer relief to Kenyans in situations where tax recovery is no longer feasible, particularly in cases of financial hardships and other dire instances. Because there are instances where people are really, tied up, but you'll still find pressure. People use those strict, laws, the strict adherence to the law, where they don't consider one's dire need or situation at that particular moment, and then they decide to just harass them and make sure that they pay with a lot of consequences. The school of thought of law that we believe is extremely strict, and it's not really right sometimes, as much as it's good for government to recover the money. This will help relieve with justifiable reasons and with all those structures that have been laid to make sure that the fund and the structure and even those who will get such relief are people that have gone through all the channels, from the Commissioner to the Cabinet Secretary to the gazettement to now this House to approve. So you can imagine it's not something that is very easy also to get, so that people do not abuse that, as I've said. Mr. Speaker, let's also look at the expansion of the scope for withholding VAT. Clause 5 proposes amendments to Section 42A of the bill by deleting of subsection 1 to subject zero-rated suppliers and registered manufacturers, irrespective of their investment levels in the preceding 3 years from 1st July 2022 to withholding tax, thereby deleting the current provision that exempts those who have invested at least 3 billion shillings 3 years before 1st July 2022. But let's look at it this way. What does the current law provide on that? The current law, Honorable Speaker, provides that zero-rated suppliers and registered manufacturers who have invested at least 3 billion shillings 3 years before 1st July 2022 are exempt from withholding tax. So the House might also take note that the provision is a cleanup, since the provision to subsection 1 of section 42A of the Tax Procedures Act speaks to the dates that are no longer applicable. That is what, as the current law provides, those very dates are no longer applicable, Honorable Speaker. Let me also speak to the penalty for failure to deduct withholding VAT. What are the penalties? Honorable Speaker, Clause 5 further proposes to amend subsection 4C by introducing 10% penalty on the amount of withholding VAT if it is not deducted from a payment, or if deducted is not remitted to the Kenya Revenue Authority within 5 working days after the deduction has occurred. Within 5 working days. So the penalty, Honorable Speaker, here that seeks to be amended, or rather to be introduced, is subsection 4C, 10% penalty on the amount of withholding VAT. Say, the amount that you ought to have remitted upon the withholding, or deducted, when you calculate now with your VAT, or rather the deduction that is supposed to be paid, Honorable Speaker, let's say it's 100,000, and then you are not able to remit the same, or you, by design or deliberately, somebody has failed to deduct that amount, then you will have a penalty of 10% of such an amount that needs to be remitted. And that would be 10,000 shillings within 5 working days. So you have a window here. You have a window here. You've deducted 1. So within these 5 days, remit it. If you do not remit it to Kenya Revenue Authority within that 5 days, then what will happen is that you will get this fine. So at least you have these 5 working days. The word here is working. So if it happens over the weekend, then it's not a working day. You'll then have that holiday of an extra 2 days, and makes it 7 days. So it is very important for this House to note that Clause 5B of the bill seeks to change the penalty from a criminal one, as it is, to an administrative offense. Because as the law is currently, Honorable Speaker, it criminalizes it, and it comes with retributive natures. Why would we seek to place punishments in issues that can be handled administratively? We can actually raise more funds from that, instead of punishing you. Some people consider punishments which are not monetary or pecuniary in nature as the best. But then now this amendment then seeks to create or to change the penalty from criminal, making it criminal. We should not criminalize the question of remittance of taxes. We should find a way, and that is why this procedure rules, Honorable Speaker, maneuvers a language to make sure that we meet at a common ground of understanding from both sides, the taxpayer and the tax collector or the taxman. So therefore, cases on failure to withhold tax or remit withheld tax would be resolved more quickly and directly by the tax authorities, making it easier to settle tax disputes. This also helps to cure the question of unnecessary bribery, because you already know that you haven't remitted the withholding, the VAT, and you know it's criminal. What then most people do, the rogue business people who want to evade taxes do, they find a way to bribe the investigative agencies so that they are not investigated. So government loses, and this percentage of, or rather this amount, ends up in people's pockets. We have provided a provision where you have 5 days to remit, 5 days to deduct, and it makes it easier. You will either be, you'll pay the 10% within this period of time if you do not either remit or deduct or deduct and do not remit, or failure to deduct, Honorable Speaker. So let's look at the refund period, Honorable Speaker, for the overpaid taxes. Honorable Speaker, Clause 6 of the bill proposes to amend Section 47(1)A of the Tax Procedures Act to give taxpayers the option to apply to the Kenya Revenue Authority to offset overpaid taxes against outstanding tax debts and future tax liability, or to request a refund of the overpaid amount. For income tax, for example, Honorable Speaker, taxpayers can make this application within 5 years from the date the tax was paid. For other types of taxes, the application must be made within 6 months from the date of overpayment. For income tax, Honorable Speaker, it is 5 years. For any other type of tax, Honorable Speaker, it must be made within 6 months. So the deal here is the income tax. 5 years. 5 years, you have such for refund, Honorable Speaker. And under the current provision, we need to compare. You'll realize that taxpayers, under the current act, the Tax Procedures Act, taxpayers can apply for a refund of overpaid taxes, except, this has an exception, with an exception of value-added tax within a period of 5 years. Just VAT within a period of 5 years. So the proposed amendment, Honorable Speaker, under subsection BI seeks to change this by limiting the 5-year period for refunds to income tax only. Income tax only for 5 years. The rest of the types of taxes, 6 months. Subsection B2, Honorable Speaker, provides that all the other types of taxes, the amendment introduces a new short limit of 6 months to apply for a refund, so that you do not, somebody does not hold your money for such a long period of time. All the other taxes, government will not be holding your money for all that period of time, Honorable Speaker. You have now 6 months. Within 6 months, make an application. Of course, except for the income tax. So, Honorable Speaker, at least the 6-month limits for refund apply only, at present, it only applies for the VAT. Now, that will change under the new proposals of the tax procedure bill. So let's also look at the integration of the electronic tax system with the data managing reporting system. Honorable Speaker, Clause 7 of the bill seeks to amend Section 95A of the Principal Act by inserting a new Section 1 that seeks to authorize Kenya Revenue Authority to require businesses and financial institutions to integrate the electronic data management and reporting system with the electronic tax system for the submission of electronic documents and transaction data as provided for under subsection 1A. It also seeks, Honorable Speaker, or proposes that businesses required to connect to the electro tax system will have a set period to do so, up to a maximum of 1 year. We all know we are moving digital, and that is what the world is doing. But again, this then seeks, subsection 1B and C and 1C, seeks now then to give you a period to synchronize your systems electronically, at least 1 year, depending on their business type. You will have 1 year to integrate such systems. And this requirement will only apply to businesses with an annual turnover of more than 5 billion. That is the best thing about this whole thing. It is particular on those people whose turnover in business is only, it's beyond or more than 5 million, Honorable Speaker. So, Honorable Speaker, subsection 5 and 6 provides that the failure to comply with the integration mandate will be considered an offense with penalties of up to 500,000 shillings per month or a part of a month of continued non-compliance. Additionally, financial institutions that fail to submit electronic documents through the required systems will face similar penalties. Honorable Speaker, the purpose of these penalties is to enhance tax compliance and ensure accuracy, timely submission of data with significant financial penalties for non-compliance. The gist is that you have 1 year to integrate. 1. 2, your business must be the business whose turnover is 5 million and above, Honorable Speaker. All the rest, there is no such provision or such proposal. So this is really a positive thing, Honorable Speaker, and it also cures time. in terms of remittance and even returns, Honorable Speaker. So for due date for submission and payment. Clause 8, Honorable Speaker, of the bill seeks to amend section 7 of the Tax Procedures Act to provide that in computing the period for lodging of an objection or appeals, the computation shall not include weekends and public holidays. This proposal will give taxpayers more practical timelines to lodge their objections or appeals. What is it seeking to do, Honorable Speaker? It seeks to amend, the penalty to late submission and failure to submit returns by an export processing zone enterprises from 2,000 per day to 20,000 per month. That would be the penalty. That will be the penalty. But what is the positive in this whole thing for business people? It is the computation, not then now including, it will not be including the weekends and public holidays as currently is. That is a positive, a very, very good thing, so that you have such timeline to lodge your complaints within very practical timelines, Honorable Speaker. Now, Clause 9 seeks to amend Section 83, Honorable Speaker, of the Tax Procedures Act to change the penalty structure for export processing zone, which is EPZ, that failed to submit their required returns under Income Tax Act. That is straightforward, and I think, Honorable Members, when they'll be retiring to ventilate and look at this bill, they will be able to understand. So currently, these enterprises face a penalty of 2,000 Kenya shillings for each day they fail to submit the returns. The proposed amendment would instead impose a penalty of 20,000 shillings per month or part of the month of failure if the failure continues. Look at that. Currently, it is 2,000 per day. What does it seek to do? Because there could be challenges for late submission, and payment. And instead of penalizing you and punishing you and even making things harder for you, you then now have a month. If it's within a month, you'll then remit 20,000. If it's within every day, if as it currently is, it's actually 2,000 per day. That makes it very expensive, makes it very, very expensive for now as it is, and this will ease the burden by the taxpayer. What are the requirements, Honorable Speaker, of a KRA PIN for registration of employees working remotely outside Kenya for Kenyan employees? Honorable Speaker, this is the final part as we get to the conclusion, almost as we come to the conclusion of this bill, Honorable Speaker. Clause 10 of the bill seeks to amend the first schedule to the Tax Procedures Act to provide that the registration of an employee who works remotely outside Kenya for an employer based in Kenya must include the requirement for the employee to have a KRA PIN. Consequently, such employees, even though they work outside Kenya, will need to obtain a KRA PIN for tax purposes related to their employment within a Kenyan employer. This requirement ensures that these employees are registered with the Kenya Revenue Authority and are compliant with tax regulations, regardless of their physical location outside the country. We all know what the PIN does. We all know that really you can't even transact on your own private transaction, including buying a car when you come to this country, buying land, or anything that you want to purchase without a KRA PIN. This also helps. In as much as you are in such country and you're working remotely, just have that KRA PIN. Whenever you want to transact in anything, including even having a bank account and anything that you want to engage in, it will be very easy for you. And that is what Clause 10 seeks to do. So, in conclusion, Honorable Speaker, allow me to state that the whole essence of our Tax Procedures Act is to harmonize and consolidate the procedure rules for the administration of our tax laws. This is what this bill seeks to achieve. But there is more, Honorable Speaker. It clarifies our processes and procedural rules and goes further to extend tax amnesty. Like we've said, it really extends the tax amnesty, like I've earlier mentioned. Clarify the tax abandonment, because as it is right now, it's not really clarified, and it's not really very, very clear. And not only does it clarify, Honorable Speaker, it then sets in the ambiguity nature so that it's not abused from the commissioner to the cabinet secretary, then to this house, so it will not be abused. So that clarity will be will really be very important in terms of tax administration and the clarity of computation for the business people through this integration system that we've mentioned that is being sought to, that is proposed in this bill, Honorable Speaker, under Clause 7, will also help in the computation of period for the lodgement of an objection of appeal. And it is for these reasons, Honorable Speaker, and several others that honorable members will be going through, that I urge this House to support this bill. It is the best. It isn't the way of doing business. It decriminalizes the question of remittance of deductions, so that you have such a period to have, to remit the deductions. And then it's actually a win-win for the taxpayer and the the Kenya Revenue Authority, because it is actually an obligation for all Kenyans to remit taxes, because it is the only way we can develop our country. We can't be demanding. On one point, you are demanding for development. On the other point, you are saying you want free primary education. You want an integrated system of bursary payment. You want roads. You're talking about stalled projects. You're talking about, electricity. You're talking about all those things, the health systems. But on the other part, you are saying, we don't want to pay taxes. We don't want to do this. We are being punished, all those kind of things. So it is actually a sign of patriotism to remit taxes and to pay taxes. And this particular bill of the procedure rules, Honorable Speaker, makes it very easy. It creates that synergy between the taxpayer and the tax administration done by the Kenya Revenue Authority. So with those very many